Hi guys, welcome to the Savvy Money Show with me, your host Sean. In the market the way it is today, we want to have companies that are guaranteed to go up. So why don't we have those companies, have a look at a couple of those companies while collecting dividends on the way. Now of course people will say you can't guarantee a company's going to go up, or can you? Let's get into the Savvy Money Show. We have Enable Midstream Partners. They have just voted and accepted a $7 billion all cash offer from Energy Transfer. Now I'm sure you know Energy Transfer. Last year they was in my monthly dividend payer. I sold when oil hit an all-time high because it just doubled in value, but I collected the dividends until then. That's one of the good things about monthly dividend payer. If you look at this, it gives 10% dividend, which we've already missed, but if it doesn't complete on time, you'll get the next one. However, it's due to complete by mid-2021. You can see the market cap's at 3 billion when I bought in, which was just the other day. It was 2.96 billion. So I expect this to start moving anytime. It has released its financial data, and in May it will have an earnings call, and I think this is going to be good for both parties, but for Enable this is going to be an amazing deal. I mean, they are effectively paying what was it? Yeah, they're effectively paying $16 a share, and you could pick it up at under $7. That's if my maths are correct, and I'm just doing that from the top of my head. Now, if we look here, we can see enterprise value is 7.63 billion. So Energy Transfer are getting it $630 million off. They see the potential in it. There's a forward PE of 10.8, price to sales of 1.2, price to book of 0.45. So even if it doesn't go through, you're getting a company that's undervalued. Now, I think this is incredibly attractive. The way you can look at it is, even if oil drops 50%, this is still going to be below book value. Even if the deal doesn't go through, but they have voted on it, they've accepted the offer, it should go through, and it's not something that's going to be going through in a year, 2 years time. It's fairly quick, and the next one we'll be talking about after this short plug. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. Shaw Communications. Now, they have accepted an offer, and it's a $40 a share offer. So although you won't be doubling your money. You will get a you will get a big bump, 1.5 times. The Rogers Communications valued it at $16 billion. Now, the thing is, the Canadian government wants better wireless connection, better networks and lower prices. It would reduce the number of providers to 3 from 4. So the only issue here is it could create monopoly and drive up costs, and all assures status as a low-cost alternative. The Rogers say it can allow them to streamline and it could allow them to streamline, sell off some of the assets and concentrate on certain areas, and it could improve things. But we all know what that means. Now, sure, at the moment is $7 billion undervalued. If it doesn't go through because of antitrust issues, because of monopoly issues, that is a company you're getting. It's also a company that Cathie Wood has in her portfolio. Now, you can see here price to sales 2.5, PEG ratio 6, forward PE of 26, price to book of 2.3. Not blowout, but I think the market cap versus enterprise value shows how good it is. It gives a 3.44% dividend, which we will get in May. I expect this to start moving soon. I spoke about this when it was about $18 a share. If it doesn't go through, you're getting a good dividend, an undervalued stock in an area just as 5G is being rolled out. Although they're not part of 5G, people will still need this. People always go for the low cost carriers, but I do think it will go through. So I believe it's worth going into it. I think the two today are where people should think about parking their money, and think about last year. As soon as a merger was announced, a takeover was announced, people didn't like the Salesforce deal, but the company they were taking over, it went up past what the price they was paying for it. People noticed that with every merger deal last year. As soon as a merger was announced, the money paid for it, it went up. Look at Grubhub. I'm surprised people are not buying Grubhub now. You know, the thing is, Grubhub, as it came down, and in the 60s, 70s mark, and yet you will see that it's going to be 75 when the sale is complete. Now, it's only a few dollars, but you know, a few dollars is a few dollars. When it came down to $60, I said then, well, why would you not pick up Grubhub? By July, you would have it, but people were into too many speculative stocks. Now it started running. That is your template. because here was when I said Grubhub has come down. Why are you not going into Grubhub to pick up the money you get from the merger with Just Eat? And then all of a sudden people noticed it, realised it was getting closer. Same thing will happen with Shaw. Same thing will happen with Enable. As soon as that date starts creeping a bit closer, as soon as Wall Street starts putting its money back in, it will start coming up within a few dollars. So we want to get in before then. I'll see you in the next video.